Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil.
Paris rapeseed. Let's start with the mid-March to late April rising wedge pattern. It's a small to medium-sized pattern. I liked it. We had a false break lower in mid-April, but the real break high happened 2 weeks after, gapping higher at the turn of the month into May out of the ascending wedge pattern. Okay, so the break high from the ascending wedge pattern quickly reached its primary target, but hesitated over the start of May, resting, it seemed, on the purple highlighted neckline, currently at 489 even. That should have acted as a cap, but ended up acting as a support once prices pushed through on the upside. Now, please remember this hesitation. Also, and the purple knockline as well, as they will also crop up again shortly. Now, 4 weeks ago, prices drove higher to highs not seen since July last year, with another gapping move higher since filled in. This drive finally saw the market reach the secondary, harder to reach target for the ascending wedge pattern. However, this is not the end of the story, as past features had been dictating future potentials, and in this case, it was with the hesitation seen in the middle of May. I said 3 weeks ago, and I quote, "This can be seen as a potential halfway hesitation, with potential up to, wait for it, a target X in the 515 area as well." I'll be interested to see how these things develop and what roadblocks crop up to try and stop them happening. End of quote. Well, what we ended up is having a failure to try higher, but with a very unusual pattern. You see, what we had was a topping action over the last 3 weeks, but it had a handle going into the pattern formed since last April. Normally I'd expect to see a handle on a V top or a V bottom, and usually after the top itself had formed. They sometimes happen before, but these are rare, and this is such a case of an early handle, except it's not a V top also, altogether quite a rare pattern. Anyway, 2 weeks ago, prices dropped down through the purple neckline, only to hesitate at the next support below, which is the rising short medium moving average, currently at 475.5, which wasn't that great, and is just ahead of the June 2021 low at 468.75 and the 2013 high at 464.25, neither of which looked that great either. I said 2 weeks ago, and I quote, "It may be that we next see support at the 50% Fibonacci line of the May to July 2023 move at 456.5. End of quote. Well, that was all a bit premature, as the 2013 high at 464.25 managed to hold up the market enough that this week we've seen not only the latest gap filled from last week, but we've seen a move up to test the green highlighted short medium moving average. So far, unsuccessfully. All the very recent actions allow me to draw a small 2 week old bearish expanding wedge pattern, currently 464.75 to 477.75. Now, I've not highlighted this pattern as yet, as it is nascent and quite small, and I may obscure it by actually highlighting it, but it does seem to be doing the job in recent days. So below we have that same 2013 high and the 50% Fibonacci line at 456.5, but we also have moving up into the frame the medium moving average, and that's currently at 454.25. However, I would raise a question mark about this last medium moving average support. It hasn't proved to be too reliable in the past, and I wonder how good it will be going ahead. Maybe the congestion around the old ascending wedge pattern from March to late April, maybe this could instill some support. Winnipeg canola. The halt to the decline from last year ended up as a nice, neat horn bottom, just ahead of the December 2020 low at 567 even. Since then, prices have rallied higher, during late February and into March, up through the May 2023 low at 611.10, the 2021 low at 629.60, the short medium moving average 651.5, and towards the end of the first rally, the medium moving average currently 634.20, and the June 2021 low at 655.90. These last two, especially the medium moving average, eroded the bullish incentive enough in late March and early April that the market halted and rebuffed trying higher for a long while, especially the testing of the next overhead resistance. That's the dark blue highlighted neckline, currently 638.90, the April to June 2023 reverse head and shoulders continuation pattern. However, in the last days of May, the market staged a move higher, breaking up through the dark blue neckline, then the June 2021 low, and most recently the descending long moving average, currently 662.40. And it thus set up the opportunity for two potential features. The first one was to look at the action, the whole of the action, from the horn bottom in February to date as a bullish halfway hesitation. And secondly, as I mentioned 3 weeks ago, we were all set with still a week to go for the month of May to be a monthly key reversal, which it eventually did become. Without doubt, both of these failed to impress, and we've seen a fall since the start of this month, down through the long moving average, below the short medium moving average, and late last week below the dark blue neckline, as well as the mauve highlighted medium moving average. And that's currently at 634.30. We've been down below the 2021 low at 629.5. I would only add that 2 weeks ago I said, and I quote, "I suspect we may see stronger support emerge down at the May 2023 low at 611.10, but we shall see," end of quote. It is down at this level, 611.10, that we have seen some support emerge, or rather just ahead of it. As we also saw at the middle of April and into the turn of April into May, the same sort of thing happening. 3 weeks ago, I drew a mid-February to very early May bullish Andrews pitch hook, and I said at the time, and I quote, "I like this Andrews pitch hook because it shows the bullish angle of attack of the market quite well, but I'm not in love with it, and I would retire it or replace it with a bullish shift pitch hook if I thought they would be a better fit," end of quote. Well, last week I decided to finesse this bullish Andrews into a shallower bullish shift pitch hook, as it seemed an even better fit. However, this was not to be, and today we sit below it, and I am considering retiring it completely. It's just that once again, given where we are right now, that the May 2023 low is a key feature here. Bursa Malaysia crude palm oil. It's been many months since we had the key break higher over the upper time, currently at 38.39, the August to November 2022 bearish shift pitch hook. Yet I still have kept this pitch hook still on my daily chart, and even started highlighting it recently in purple. Why I've done these things? My reasoning became clearer during May as the market hesitated and apparently started building a base on this very thoroughly broken upper time, helped by the 50% Fibonacci line in the May 23 to April 2024 move at 38.75, as well as the gold highlighted flatlining long moving average, currently at 38.85, and the bright red highlighted May 2023 to date uptrend, currently 38.88. So after the moves higher in March, we had the decline in April, and during May we have had the start of what looks like a bottoming action. It is only becoming evident now, especially with April being a monthly key reversal down, but it does have some significant elements. So what now? Well, 13 weeks ago I gave my thoughts on what was going on, and I quote, "So what now?" Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if the prices reach up to the 44.08 area, and then what prices do at that level. And that's the end of the quote. I can think of no better way than to still monitor what the market does should we get up there to that 44.08 level. We have been over it before in early April, but there have been no longer term closes up there. And by that I mean monthly closes. None over it, not yet. It is quite a mouthful, but looking above, we have some resistances, which the accumulation of action over late April to date, especially the support of the gold highlighted long moving average and the bright red uptrend, the 50% Fibonacci line at 38.75, and even the decline in purple upper tone could provide sufficient ammunition to have a useful try at tackling the top side. Prices just need to overcome the following. The green highlighted short medium moving average currently at 40.11, the mauve highlighted medium moving average at 40.29, the dark blue neckline currently at 41.18, the September to November 2023 reverse head and shoulders pattern, the bottom there, the July 2023 high at 41.89, and the twin 38.2% Fibonacci lines of the July 2019 to March 2022 move at 42.39 and the May 20 to March 22 move at 42.74, with the neckline of the September 2015 to November 2017 head and shoulders top currently at 42.79 nearby. So it's quite a mouthful in the way, and quite a bit to be looking forward to if prices do rise. And this is where I come to the very recent action of gapping moves since filled in, and the new feature of a green highlighted neckline currently at 39.55. That's of the late April to late May reverse head and shoulders pattern. Now, prices have already reached the primary target topside for this pattern, thus leaving the secondary target X up in the 41.20 area. Yet all this does not take away from what are the two essential questions of this market. The first one deals with where we are now, and that is in essence between the bright red uptrend below and the dark blue neckline above. We are still where we were at the end of April, caught in between these two. The question is, which way next? The answer? Well, the answer is still not clear, but I would note the slightly bullish rise in both the uptrend and the neckline. Secondly is the action since the beginning of April, especially since mid-April to date. Does this action look like a bearish halfway hesitation, or a reverse head and shoulders pattern, or maybe combined to look like a rounded bottom? On this, the situation is still early, but right now I am still minded to look at it as a rounded bottom type pattern. But it will very much depend on what the market does once the green highlighted short medium moving average drops down into the market, which may happen as soon as next week. I apologise for the cheering in the background during the latter part of this commentary. That's because England just scored a goal in the Euros.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.